Good morning friends. Today we are going to learn working capital management concept from cases in finance subject from TYBBA. I am Assistant Professor Srirajpur. Let's go through with concept of working capital management. So working capital management is short term assets and liabilities management. So assets which are required and liabilities which are required for day to day business, that is called as working capital management. Equation is that current assets minus current liability. What is goal of working capital is to ensure the company can meet its day-to-day operational expenses, and it is important why to maintain the liquidity, operational efficiency and profitability. So we can calculate liquidity with the help of current ratio, liquid ratio, operational efficiency with the help of gross profit, net profit ratio, and profitability with the help of different profitability ratios. Let's go through with more detail about working capital management. Working capital includes both current assets and current liabilities. So current assets are cash, inventory, accounts receivables, debtors, and current liabilities are accounts payable, short-term loans, accrued expenses. So net working capital resulted into current assets minus current liabilities. After that we can add margin and resulted into net working capital. Next part is objective. First is to maintain adequate cash flow. So day to day cash receivable and payable must be managed by the company. So working capital is important. Minimize the cost of capital. So every company always try to minimize their cost of capital and try to borrow funds from the market with minimum rate of interest and dividend. Then optimize the assets utilization. So assets must be utilized in a optimized way, and the balance between the risk and profitability, and balance between risk and uncertainties and profitabilities. These are some objectives of working capital management. So there are two types of working capital. First is permanent, which deals with the minimum level of current assets required, and temporary working capital, it deals with the extra assets needed during peak season or special projects. Next is key strategies. So it is helpful to speed up receivable collections. It is possible for company to recover debt from the debtors or creditors. Next is to manage inventory efficiently. It is possible to avoid capital blockage. Then delay payables without hammering suppliers relationship. So company can maintain good relationship with the help of supplier and can make payment within time to the supplier. Then maintain sufficient cash reserves. So it is helpful for company to keep aside cash as a working capital management. This is working capital cycle. So first is cash. We use cash for purchasing of inventory, means stock. Then next is sales. We sold out to the credit debtors. We collect money from that is called as accounts receivable, and again cash. So working capital cycle starts from cash and ends on cash. So this is shorten the cycle to free up the cash. So most of the companies are having 2 months to 3 months working capital cycle to convert their cash into cash. These are some techniques. So cash flow forecasting, credit management policies are there. Inventory management techniques like LIFO, FIFO, just in time technique, EOQ techniques are used to have a good working capital management. And vendor relationship management is also important for the working capital management. These are some factors for working capital needs. First is nature of business. According to the type of business, manufacturing, servicing and trading, the requirement of working capital is different. Next is business cycle stage. According to the cycle of the business, some businesses are having very fast cycle of conversion of cash into cash, so the duration is less. Next is seasonal variations. So according to the season, the working capital requirement is different. So when there is seasonal products, so in that case working capital requirement is high, and if in case of off season, working capital requirement is less. Then credit terms, so it is decision of management that how much amount of credit they are going to take from the supplier and provide credit to the debtors. So it will affect the working capital needs of the business. Then importance of efficient working capital management, so it enhances the liquidity and solvency. It is possible for a company to maintain liquidity, means liquid cash they can maintain. Then solvency with the help of increasing asset and decreasing the liabilities. The ratio between assets and liabilities must be 2:1, more assets and less liabilities. And they always try to reduce financial cost, that increases business profitability. They always try to increase the profit and improves overall financial health of the business. So every business try to maximize profit, maximize wealth. So it is helpful for company to improve their financial health. In conclusion, we can say that efficient working capital management is critical for business survival and growth. It is very important to manage long-term capital as well as working capital when it requires balancing risk and returns in a day-to-day operations. So risk and returns must be considered properly, and continuous monitoring and improvement is essential with the help of working capital requirement management. Thank you.